Thank you for joining Market News with Rodney Lake. This is a regular show of the GW Investment Institute where we discuss timely market topics. I'm Rodney Lake. I serve as Vice Dean for undergraduate programs at George Washington University School of Business. Let's get started. Welcome back. This is the next episode of Market News with Rodney Lake, number 4. Thank you for tuning in and great to see everybody back. Today we're going to be talking about AI, which everybody's talking about, of course, artificial intelligence if you're not paying attention at home, and its impact on businesses. At the Investment Institute, we're always thinking about, okay, what's happening with business? How is it being impacted by different trends? And AI seems to be a super trend. Now, what does it mean? So we're going to talk about it in a couple of different things. And the tip for the next episode, for number 5, we're going to talk specifically about the largest holding, Nvidia, in the GW Investment Institute portfolios. But for another episode, back to Nvidia. Now, when you think about AI, what are you thinking about? Well, right now, everybody's thinking about ChatGPT and thinking about, well, maybe I can write an email faster. Maybe I can use Grammarly. Maybe I can use all these functions and it makes me a little bit more efficient. But those things can add up to big efficiencies. So let's really start thinking about, businesses overall. We're going to use the framework, which we talked about in episode 3, which is the GW Investment Institute framework, which is business management, price valuation, and balance sheets. We're going to look in the context of that. And for this discussion, it's really going to be mostly centered around the business and the management. The price and the valuation is indirectly impacted by artificial intelligence, and so is the balance sheet, perhaps. And we'll talk about a little bit about that. But let's first start talking about the business. So AI is going to impact different businesses in different ways, obviously, or maybe obvious to most people. When you're an investor and you're thinking about, hey, how can we use this to our advantage? Or how can we start sorting out this company is going to be impacted in a positive way and this company potentially is going to be impacted in a negative way, and making sure that we allocate our resources appropriately in our portfolio, it's something that we have to really consider and think about and try to think through and think about what are those impacts both directly and indirectly in the companies that we own and the companies that we're thinking about owning. But there's all sorts of things out there. So maybe some basics here is, what is artificial intelligence? Well, they call that artificial intelligence in PowerPoint. It's AI. But when it's actually being used, it's machine learning and statistics and all of these things that happen behind the scenes. And there's, of course, real world examples already that you interact with, which is if you're using ChatGPT, if you get recommendations on your music or in Netflix and these other categories, Netflix, publicly traded company as well, and Spotify and Apple also. So this thing permeates sort of everyday life in developed countries in any case. And it's just being more and more embedded. Now, who are the companies that are going to take advantage of this? That's what we have to start thinking about. And what are the long-term impacts? It's happening everywhere from things like customer service. So what's the customer service impact? Well, maybe now you're dealing with a chatbot. And so if you have a banking application, there's been lots of advertising for different banks for their chatbot. But anytime you log on to a different service and you're trying to get a customer representative, likely it starts now with, can I help you via this chatbot? All that's really powered by machine learning algorithms in the background. And likely that reduces headcount. They probably still need people, right? But the number of people that they might need for this labor-intensive activity starts to go down. So you start thinking about companies that, are they going to benefit from this? Well, who are those companies? Well, companies that need lots of customer service representatives. And before we mention, I did mention Nvidia already, any of the companies, just a broad reminder that this is not investment advice. Anything that the Investment Institute does, it's for its own portfolios, and remember, it's student managed. But we talk about companies, and so I just want to be clear about that. Another broad category would be marketing and sales. And so some of these things that you put online, they can generate themselves, can create great marketing content. And so again, back to the large language models that are out there, that's ChatGPT and Claude and Gemini from Google. And lots of people are now getting in the act, including now X, what was formerly Twitter, has their own feature called Grok, which is backed by not OpenAI, that's the former with Elon Musk, but XAI at the moment. And so you can use these large language models to create all this marketing content and sales content. And maybe that does start to replace some of the people that maybe are those first-year associates at a marketing firm and an ad agency. I think it's to be determined on how that impact happens and where that happens and how companies can filter that in. So if you're a company, publicly traded company like Nike as an example, you're likely outsourcing a lot of your sales and marketing to third-party agencies. But are they at the agency using it? Are you now going to be more embedded with those agencies and thinking about how you're using AI and what recommendations come out of that and what efficiencies can you get out of that? And really, then it becomes about tailoring your spend. And so all that already stuff starts happening when you're using analytics for different platforms. You can think of an old one called Facebook and something that people are using now or that the kids are using, TikTok, for example. And what are the algorithms that are steering people to those products and services, and what AI is being used for that? Maybe that starts to replace a lot of the traditional positions within companies. And maybe these companies become more profitable as a result. So you have to start thinking about, well, if I'm eliminating labor, if it's a minuscule portion of the cost structure in any case, well, maybe that's not going to actually have a big impact on profitability. So maybe that company is positively impacted, but it's not going to make a big enough difference in the gross margins, in the net margins, to have a significant difference in the outcome of, okay, the net profitability does change dramatically. So that's another thing to think about. Some of the other categories just to consider are on the supply chain and operational management. So you think of logistics companies, and one of the, a few of the best known logistics companies would be Amazon, for example. I'm sure everyone or almost everyone has received packages or maybe picking up a package off your porch as we speak or getting it delivered to your building or wherever you happen to be, in FedEx and UPS. And so moving all these packages around is a complicated process. Takes a lot of thought in, how do you optimize this system? Well, if you apply machine learning algorithms to say, okay, let's optimize this network, you can probably drive efficiencies that were not as obvious before to a human being, even somebody that's really experienced. Well, that might change the operational setup. And it might, for example, make Amazon more profitable on the logistics part of the business. It might make FedEx more profitable on the logistics part of the business, and same for UPS. And so what's the impact for them, and can they use it? Now, just because they can use it, will they use it, and can they be effective with it? Those are different questions that need to be answered. So when you start looking at these companies, you got to start thinking about, okay, what type of AI applications are they currently using? How are they implementing those things? And are they really driving efficiencies that then turn into profitability for the company? So that the gross margins come out and expand, and the net margins ultimately expand. And so then where you're connected to the valuation piece when we talk about the business management, price valuation, and balance sheet is on increased profitability. Companies that have higher net margins, higher gross margins, tend to get higher multiples on their PE as an example. So that's the indirect impact when I talked about, you got to think about these indirect impacts on price valuation and balance sheet as some examples. For all these companies, that's what you're really looking for. What is the impact, and really is it going to drive profitability? So as a shareholder of a company or a potential shareholder of a company, you're going to be thinking about what applications are they specifically using to drive efficiencies that then drive profitability. If they drive efficiencies that don't really turn into anything, well, that could be nice. That could be kind of a parlor trick for some of the things. But if it really doesn't make a difference in the bottom line, well, kind of a nice to have, and it's cute, and maybe it makes sense to deploy some of that. But if you're a shareholder, what you're really looking for is material and meaningful impact on cost savings or revenue generation, or ideally both. And so when you're talking about the sales and marketing side, you're saying, well, how can we more efficiently drive revenue from sales and marketing, and how can we more efficiently cut cost? And right, you're driving the top line, and you're cutting things off from the bottom line. So that leads to higher gross margins, higher net margins, and higher valuation for your company. So if you're a CEO, you should be thinking about it. And if you're not already, be thinking about, how do I allocate capital, which is the top job. Now we're going to dive into management a little bit of a CEO of a management for the management team, is to drive allocation of capital. And so now diving a little bit, into the management piece, from business now to management, management has to think about what, are the applications, what is the capital requirements for those applications, and what sort of time commitment are we going to make to these projects. And again, as an analyst, you got to really get in there and you got to see, okay, well, what does the management team say they're spending money on? Where can I find those things? Those things are in the press releases. Those things are in the annual reports. Those things are in the conference calls for the earnings calls when people ask questions. And management says, we're spending, X on deployment of AI. Well, ideally, it gets a little bit more specific than that, and you can figure out, okay, well, what types of things are they building on? So one, probably the largest real world project for using AI is Tesla and the full self-driving. That has been, sort of the widely known and sometimes widely criticized that it's not full self-driving yet. However, if you're an analyst, you can start to think about, well, that will have a very material impact on the value of Tesla, because if you can replace all the drivers for Uber, for example, and you get a cut of all of that income with no drivers, number one, it makes Tesla more valuable because it makes all the cars on that network more valuable overnight, because they go from depreciating assets to cash producing machines if the full self-driving can work. And obviously the regulation has to catch up with that too. And is it more reliable than a human? And if it is, well, at some point, probably regulation will catch up, because the reliability it'll probably have to be at least 10 times better, maybe 100 times better than a human, and prove that over some sustained period of time. But if that's the case, well, that is an enormous valuation increase to Tesla. So this is a real world AI problem that they are working on. It seems they have the lead in this. There are other people vying for this. They got some permissions in China to operate as well, but they're having, a lot of work, a lot of time, a lot of energy, a lot of capital going into this business. And they specifically build the cars on the software and the hardware side. They're on hardware 4 now, for example, to try to solve this problem. Well, that is a great example of, well, they're going to unlock a lot of value if that works. Now, it's not predetermined that it will work, and maybe it takes a much longer than people expect. So far, it has. The expectation from when it was going to be deployed versus where we are now. However, again, that's a major gap in valuation that will accrue to Tesla. The same thing on their Optimus robot. If they actually get the real world application of AI working, well, they're deploying the same thing in the Optimus robot, and now everybody can have a robot at home to help do things, especially elderly and kids. And there are all sorts of circumstances and scenarios where you would want to have somebody to help out that is a robot that's on call 24/7, that's reliable, that doesn't get tired, that doesn't make poor decisions and make mistakes. And so the same for driving, again, helping, let's say, an elderly family member at home, and even in homes. So these are some of the benefits on the efficiency side for doing these things. And there's many things that you want to be thinking about on the benefit side, but you also have to think about, okay, well, what are the negative impacts for this, and what are the potential drawbacks? One I mentioned a little bit already is that it may not pan out, right? Some of these things a company and a management team may invest a lot of capital in, and if it really doesn't pan out, well, it could be sort of a lost cause and a lost leader in a company for a long time to say that, okay, we're going to get this solved, but it really doesn't do it. And so as an analyst, you also need to start thinking about that on the management side, is on the allocation of capital. Again, your job as an analyst out there, if you're looking at companies, is to try to think about, what's the management team doing, whether they're buying companies, whether investing in their own products and services to make them better in-house, whether they're turning money back to you in dividends or share buybacks, or whether they're paying down debt. Those are the only categories really that they can do to allocate capital. So when you have retained earnings, those are the categories. And so the allocation of capital for a company, especially that's growing, it's your job as an analyst to try to figure that out. What are they doing? Is it efficient? Is it effective? And is it going to really drive productivity in the company and ultimately either gross margin and net margin expansion or not? And on the downside is this has a big potential payoff, but if it's a small probability outcome for success, well, you have to weigh that in as well. Maybe it doesn't work out, and maybe it's going to be a lot of capital into something that doesn't really deserve that, and maybe that capital should be deployed somewhere else, or maybe it should be paid in dividends, or maybe it should be for debt reduction or share buybacks. So some of the challenges, we already mentioned this a little bit, and this is on the management team to try to figure this out, is implementation. So what are they doing to implement these technologies? Are they just saying, oh, we're going to use AI, right? So if you see management teams running around and they just add AI to different things, but there's no real substance to what they're doing, if they're not getting specific about what applications they're doing and what parts of the business that they're using AI on, it could just be kind of a fool's errand. It could just be sales and marketing from their standpoint to try to let people know that they're on the cutting edge, that they're doing things. But in reality, it's not really happening within the company. They're not really deploying things. And so again, your job as an analyst on the management of the BNPB is to try to figure out, okay, what's the substance versus what's actually not happening, or what's the substance at the company versus the talk. And so you want to separate those two things, and that's your job as an analyst. Another part is, another risk is just over-reliance. If the AI systems start functioning but are brittle or relatively weak and can break down, and they start, let's say they take a labor-intensive task like a call center and they start letting people go. This is a simplistic example to make the example. But then the AI is brittle and breaks down, well, then you're in a situation where customer service potentially starts going down when you thought the opposite, it was going up, that you had a highly reliable system. And so that's, again, a simplistic example, but in general, that's what you need to start thinking about as an analyst. Okay, if they're replacing things with AI, is it highly reliable? Are they creating a system that is more resilient or more fragile? And if they're creating a system that's more fragile, that's generally not a good thing. You want to build systems that are more resilient and they can take care of things on an ongoing basis. And you want to make sure that for any of the things that they do that don't work, that the company quickly has a lessons learned and takes corrective action and figures out what it's doing. So I think, your job as an analyst and when you're thinking about these companies is to, number one, look at these businesses and try to figure out, okay, what can make this business better. Buffett talks about a moat around the business. And so, he talks about having sharks and alligators in this moat, and it's difficult to cross this moat. So is the AI on the business side helping the moat get bigger, meaning making it more difficult, making it more durable, that this company can keep its competitive advantage, whatever it happens to be? So, for example, Microsoft has this partnership with OpenAI and is deploying, Copilot as an example across all their products. Well, is it making their position stronger? Very likely. I would argue that it absolutely is. It already had a good dominant position in the Office product market. And now when you add in Copilot as an example, I would say that the moat around their business, around those specific products, has gotten wider. They've made it easier. They've made it basically built in an assistant for everyone to use that. So if you're trying to code, as an example, and you're not really a coder, well, you can use Copilot to help you out. You can use Copilot to check your code if you are a coder. And so those are examples, but that's an example of Microsoft trying to widen that moat out. And again, Buffett talks about this durable competitive advantage that companies either have or don't have, and they're either building it or it's shrinking, and other companies are chipping away at that. So how are you inserting this AI, in quotes, function to increase that moat, to increase that durable competitive advantage, or it's a distraction and it's really not helping, right? So that's, again, your job as an analyst on the business side. And then on the management side, is it real? And these analysts are saying, or these management teams are saying to analysts, well, we're doing all these fancy things in AI, but what are the actual results? What are the meaningful results? And where's the allocation of capital going? To use Microsoft as the example, I would say that capital is going in the right direction. So Nadal is, I think, making a great investment, both in OpenAI and in the products that they're building on top of that and integrating with Copilot as an example. And so Microsoft increasing their durable competitive advantage. And so these are things that you should consider. So, where's this going? How many, I think nobody really knows. How long will this take? I think it's a structural change in what we're doing. And so I think it really deserves a lot of attention to try to understand what the impact is. And before we close out here on that part, rather, is to talk about the indirect pieces, which is on the price and valuation, which I mentioned already, which is, what are the benefits there? Well, if you increase profitability, the market tends to reward you with a higher multiple. which means obviously your valuation goes up, which means the company is worth more for your shareholders. And on the balance sheet side, it's also an indirect impact that if you're more profitable, you may end up with more free cash flow, right? And there's examples out there of that, Nvidia being one of those. And so that's likely going to improve your profitability if you're actually deploying these things correctly, which then in turn drives your free cash flow if you're doing things properly. And that's a way to improve the position on your balance sheet. And so that's a way to have this bulletproof balance sheet if you don't have it already, or to increase your position. So if you look at a lot of big tech companies, Microsoft sticking with that example, bulletproof balance sheet and really increasing that position from where they are now and really leading in the AI game right now. Now, that might change. Apple, as an example, has been seen to be a little bit behind in this area. And are they making good progress? It doesn't seem like they've made as much progress as Microsoft, but they, just launched Apple Intelligence, and they're saying they have this partnership with OpenAI as well. And so we'll see where that goes with Apple, but it's clearly something that you should pay attention to. We're shareholders of Apple as well. It's one of our larger positions. So something that our analysts at the GW Investment Institute, our students here at the GW School of Business, really need to think about. And how do we think about how Apple is either getting ahead, staying behind, or really staying in the same place, which is really falling behind. And so the argument is that, well, Apple tends to not be first in things, but it's second, and it moves quickly after that and figures out how to really do it well. iPhone being one of the most specific examples of that great success for them. They didn't create the smartphone, but the iPhone became a category killer, and now they have 1 billion devices deployed, and obviously that has worked out super well for them. So again, when we talk about business, increased profitability, how are we driving that? How are we making the business better? What's the durable competitive advantage, and how is that improving ideally? And if it's on the opposite side, we got to think about, well, if we own this company and it's deteriorating, maybe it's time to get out. Maybe it's time to sell that company and move on. On the management side, trying to separate talk, which there's tons of talk out there about, hey, this AI is revolutionizing, X, retail, e-commerce, all these categories, right? And the management team will say that they're participating in these things. How do you separate that talk from action? And then within the action, how do you understand, without being an AI expert overnight, but how do you understand the specific applications that they're supporting, that they're investing in, and are they driving real economics on the positive side for the company, or they're just putting good money after bad and really just deploying things that, again, are kind of parlor tricks and maybe nice to have, but they actually don't drive productivity. They don't drive profitability for the company. And so those are the two categories within the BMPB that I think you really have to watch out for. I think the other parts of the category, which is the price valuation in the balance sheet, will indirectly benefit if you get those things right, or they'll indirectly not be as good as they could be if you don't deploy those things. So on the business side, I think it's tremendously important for all of us to understand how businesses are impacted by this AI category or by the structural change in AI. And what does this mean for you as an analyst? And maybe this is just another part of the toolkit that you have to start thinking about. And another part of this is thinking about how you, as an analyst, if you're doing fundamental analysis, which is part of our classes at GW, how are you deploying it for yourself to try to understand these things? And you should be doing that too. So it also applies not only to the companies that you are looking at, but it applies to you as an analyst also. What are you thinking about this company, and how are you going to use AI tools to help you evaluate that more efficiently, more effectively? So it applies to the analyst community as well if you're doing fundamental analysis. And we run fundamental classes at the Investment Institute, and we run a quant class as an example, where that's all driven on model-based. And our students are already using neural networks as an example to try to figure out ideas for that quant portfolio. And we want to make sure we're at the forefront of teaching students about that. So I'm going to close this episode just with a little bit of the talk. This year we had our conference in 2024. We had a conference for the Investment Institute about finance and AI and really where this is going. It really, centers on the things that we already talked about, which is, there's a lot of talk, but actually, where does the rubber meet the road? Some of our students showcased some of the companies that they were pitching. We had an industry panel, some consultants in the business talking about, how they're helping companies deploy this. You definitely can see that it's a pretty active community. And so it's really about doing your homework, trying to understand what's going on, making sure you're putting in the work. But I encourage everyone that if this is something you're thinking about, to really do a deep dive as much as you can on the impact of AI for whatever that you're doing. In the case for the Investment Institute, it's our analysts thinking about businesses, and in particular, publicly traded companies. And so what's the impact on those companies? And it's likely going to be different for different categories, but there are different sectors, for example, in the S&P, which we own companies in all those sectors. But really, for the most part, all these companies are now becoming tech companies even before this wave of AI. So you really have to think about, what's a tech company? One example would be John Deere. We have owned John Deere in the past. Again, disclaimer, we're not promoting any specific companies that I've mentioned, but John Deere now considers itself a technology company. And how are they using real-world AI to deploy their tractors for remote operation, more precision agriculture, all these other things? Maybe not something that you're thinking about day to day if you're not in that community, but you can see that technology is now pervasive in all these categories. So whether you're a healthcare company, you're an industrial company, you're a traditional tech company, but you're a media company, whatever it happens to be, you're Walmart, right? Logistics, supply chain, how are you better optimizing that for your stores? And what tools and techniques are you using to do that? I encourage all of you to drill in, figure that out, do a deep dive. This is not going away very likely, so get smarter on AI and look for the impacts on those businesses. I appreciate everybody's time, and we'll see you back for episode 5 with Market News with Rodney Lake. Thank you. Disclaimer: the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guests and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.